What's going on, guys? Welcome into your Energy Newsbeat here on this gorgeous Tuesday, January 12th, 2021. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the producer of the show, and the director and publisher of the world's greatest website, www.energynewsbeat.com. Stuart Turley, how you doing today, my man?
It's a beautiful day in the neighborhood, and we're going to be flying around the world on my section.
Holy smokes! You can check out the rundown. To I think it's to my left here. I'm always bad with that type of stuff. The international game has a lot. We're going to cover Japan's LNG crisis. EIA drops a new short-term energy outlook. Shell's cutting some jobs in the North Sea. Also, Intero does some upsides, and we'll talk about that. But before we dive into the equity markets, guys, please just subscribe to this YouTube channel, Energy Newsbeat. Hit that pesky notifications button so you never miss an episode. Follow us on Twitter at Energy Newsbeat. Both the website, Twitter, and YouTube are the best places to stay up to date on everything Energy Newsbeat, which is the best place for all of your energy real-time news. Looking at the equity markets today, it was fairly flat when you look at major indices. SPY was flat on 0.04 percentage points. Nasdaq finished just a hair down, about a tenth of a percentage point. Dow Jones was about a quarter of a percentage point to the upside. The key is this, guys. Interest rates continue to climb. 10-year benchmark yield traded briefly at 1.187, its highest level since March. That 30-year bond rate climbed to 1.88 percentage points. The reason why these rates have been on the rise is Democrats have secured majorities in both the House and the Senate, opening up the door for more fiscal spending. As you guys remember, last week, President-elect Joe Biden promised an economic stimulus rollout, which he said will be in the trillions of dollars. Reports have it at $3 trillion. The quote here from Gregory Faranello, head of U.S. rates at AmeriVet Securities: there's been a short-term shift in the market. Markets have shifted to the mindset that as the Democratic ripple is digested short-term, the focus is now turning to growth and inflation, and perhaps a combination of both. The more money the Fed continues to pump in, the more inflation we'll see to happen. But this is also seen as these higher rates are also making it more expensive for tech companies, which have been wild market leaders over through this pandemic. And that's the interesting part, is what this does to the Nasdaq. As rates go higher, you're going to see the Dow Jones and the Nasdaq split because of the fact that now these tech companies who are borrowing at such an insane rate won't have to just pay a little more. They're still going to pay, but they're just going to be paying a little more. Moving over to the crude oil side, bulls have been in control, people. Holy smokes. 53.12, up 1.6 percentage points on the front end of the curve. Back into the curve, only about 1.5 percentage points. Still trading about 51.20, so still in this contango market. Natural gas chops a quarter of a percentage point down to $2.74 after just, really, again, we're back in a weather trade again. $2.90 for the back end of the curve. That was down about 0.3 of a percentage point. XOP, which are E&P securities contract, up 5.6 percentage points. Rumble on home, baby. 70.65. OIH, our oilfield services, up even better, up 5.89 percentage points. 186.18. Gotta love oil and gas. Get back to work, baby. On the downside, let's look at a couple numbers. There's still some losers. Only 1, 2, 3, 4, 5, 6, 7, 8, 9. Only 9 on the day, though. A couple of them were Ramaco Resources. Denbury didn't have a good day. Not a good time to be CO2 flooding. Pretty bad. Synovus Energy, we had a big Canadian merger with them. Last year, but they were down 1.6 percentage points. Tensico Gas and Haldor Energy, big movers on the upside, people. Intero Resources, they're up 13 percentage points. We'll cover why earlier. Range Resource Corporation is up 14 percentage points. CDEV, after the brink of death, up 17 percentage points. Sanchez Midstream Partners, they're up 19 percentage points. Amplify Energy up 21 percentage points. Whew. All right, again, buckle up. I've got enough frequent flyer miles in the past 3 shows to take me at least to Amsterdam and back to not virtually, but in person, cover the next OPEC events. Stu, give me the international news desk. What do we got?
Oh, hey, we got some fun things going on here. First one, Shell is part of the 9,000 jobs that they had talked about in September. This is 330 that just got announced out of the North Sea in Aberdeen. So our hearts go out to the folks there in Shell. More jobs lost. Moving right along here, I found this one kind of fun, and we had some traction on Twitter on it. Saudi crude keeps flowing to the Red Sea as east-west pipeline repairs continue. They were hit with some bombs not too long ago. And Saudi Aramco's 5 million barrels per day east-west pipeline was hit by a drone attack in May, and it's still under repairs. But now Saudi Aramco is very quiet about their secret, quote unquote, pipe that is his backup. So you got to love that when you have a secret pipeline that is not so secret. So,
Well, yeah, exactly. They don't do. It's not the CIA we're dealing with here.
no, but redundancy is a good thing. Okay, we are to two news stories here. Okay, we're flapping all the way over to Japan.
This
Ding.
one is such a crazy story.
It's kind of wild. Among the, it is Japan's power supply tightened on low LNG stocks amid severe cold spells. Now, here's the funny thing: ExxonMobil sold an LNG cargo from Australia's Gorgon LNG project for a January 21 to 28 delivery, and there's some more Twitter feeds going off for us here, and so they're having to use coal in order to help meet the needs in the electrical power grid.
Well,
So
LNG spiked to an all-time high. It was like Well, what was the price? Do they have what the price of LNG was in there?
mid 30s.
Woo-hoo-hoo-hoo-hoo.
Oh yeah, 678. 678.
And it normally trades about $1.
Yes. So
Kill me.
LNG, and I've always been a big fan of LNG throughout the world. Now, on that same line, we're flapping from Japan over to the UK. Nothing on
Okay.
the sleeve. Watch me pull an article from the UK out. UK industry group says the increase in coal shows the need for new nuclear reactors. We love a balanced approach to energy as long as it gets people the lowest cost per kilowatt per hour to elevate people out of poverty. This one is kind of interesting because it says gas and coal regularly hit 60% of UK's electricity generation. Over the same period, the fleet was leading zero carbon generation. However, half the fleet will retire by the end of 2024. At the same time, coal is due to be phased out. So here's the problem the UK have. They do not have the fleet or the capability in 2024 to bring natural gas or other on. Stay tuned for some entertainment. Okay. With
Yeah.
that, do
No,
what?
I think it's really funny how let's go green, but now people now want to get on nuclear all of a sudden. It just cracks me up.
And you helped bring that attention to the Japanese article. They did not get rid of their plants yet, and they need the coal because you cannot rely on one source of power. That's why you got to have a balanced diet.
Yeah,
Kind of like my
and
mom
along
told.
this note, if you want to stay up to date on all of our we roll out so many articles that we have a one-click notification. Click the little red bell at the bottom of Energy News. Every single story we do gets piped straight to your desktop to stay up to date on everything. That's how you're going to stay on top of this news. Subscribe.
Oh, and subscribe, and our Twitter feed and our video feed.
That's true.
The EIA forecast, this one right here is
Yes.
kind of interesting. This is from the EIA and the IEA, the international EIA, and it's kind of like, never mind, bingo had a farmo the way that was going. All right, the EIA forecast of the total energy consumption. This is going to be kind of back to our gigawatt and all that kind of good stuff here. U.S. energy consumption will rise by 2.6% in 2021 and 2.5% in 2022. But that's after a 7.8 fall because of COVID. Now, all that being said, let's go to those increase. They're predicting that Brent crude will be at 53 per barrel in 21 and 22.
Which is hilarious because Goldman sees 65. So there's a wild disconnect there.
Absolutely. What are your thoughts, Michael? What price do you see?
I prefer the EIA's conservative estimate to Goldman's 65. I think it's probably 55, 56.
I I can't even begin knowing what I know about all of the world hubs and everything else that's going on. I'm tracking out there. I'm afraid to put a number in there, but I like your statement. Okay, you have been beating the snot out of me over natural gas.
It's not you. You've actually been the most conservative price guesser.
Okay, part of this EIA report, prices averaged at 2.03 million British thermal units MBTU in 2020. $2.03. Okay, go ahead, get it out, Michael. Tell me what you think. Just give me I told you so.
I mean, I told everybody this
Okay,
months
great.
ago.
Okay,
There
that's
was
enough.
no way we
That's
were seeing
enough.
450
That's enough.
gas.
That's all you need to tell me. That's enough. Okay. Now, EIA expects Henry Hub prices to rise to 301.
Color me shocked. I don't think so, but it really just
Okay.
depends what happens with crude oil production. If we see crude oil production continue to come online, if we see a higher oil price, if we see $65 oil, okay, we're going to see 500 rigs. Then we're going to be adding production.
Right.
So that means gas prices probably not stabilized, but they're probably capped. If we go into another, if we get locked down again, though Cuomo came out, you just love to see what Cuomo came out and said. We cannot lock down. Talk about what do they say in the military? About face. It's exactly what he did. An about face. We're staying open. Oh, interesting. We've been saying that for months now. Point is, I don't think lockdowns are happening again, which means maybe that could be true, but I don't think so. I'm gonna stay bare because I'm always there.
Well, the last thing on this one is the EIA also says that 327 on gas in 22. So
Yeah, guessing what natural gas prices in 2020 is trying to guess who's gonna win the Super Bowl at the beginning of the year. It's too hard. You ain't gonna get it. It's too difficult.
no,
But I appreciate the effort.
our phones are going off the wall here, man.
No kidding. We also run in Technical Tuesday from our friends over at Hot Take of the Day.
Yo,
right?
you bet. You bet. I'll tell you what, I really enjoyed this article from DRW, and it was absolutely very good background on Tesla. Not only did DRW go through the whole thing, he went and said it's not about the stock. You have to take a look at the stock, and you have to take a look at the company. Elon has done a great job, or as I affectionately call him, Elton, is absolutely done a great job with that. I love what he has done with it. Now you take a look at it, but Tesla is so much more than a car company. And some of those numbers, did you get a chance to look at those? Total income was 369 million. They can generate more revenue from the sale of regulatory credits rather than what the company can do. You and I have been saying a long time tax credits are pretty important, but some of the stats on this are an excellent read on the site. Technical Tuesday, DRW.
Yeah, I just think Tesla's the play because you think, in my eyes, Tesla's a licensing play. I don't think this EV craze will spin out, and who knows, in 50 years we could all be using nuclear powered cars. I mean, think about it. Like, the technology could do that. What I feel like is very, and this is how I feel, but what I think is so valuable about Tesla is what they're doing with the self-driverless cars, and how everybody in the industry is going sensors and they're going cameras. And my dad, who he doesn't work in the EV, he doesn't work in the self-driverless car space, but knows how to get this done. Ultimately, cameras are the only way to go because you can actually get a 360-degree view with cameras. Sensors can only do so much. You can only add so many sensors. You can only read so much. So the fact that that's where they're going, they're already one of the market leaders in it. That's where I think Tesla becomes wildly valuable. Just licensing their software to every single car provider, whether it's a gas-powered car or whether it's an electric vehicle. That's my take on Tesla here and moving forward. I think the whole EV thing is, we'll find out. I mean, it's nice, but It's worse than drilling wells. If you want to, it's better for me in the environment just to go dig a hole in my backyard, start producing oil, than it is to go mine some copper to go make a. Don't even get me started about these batteries.
Oh no, they are not ecologically friendly, and they have children in poor countries mining for them. So they're not a.
Yeah.
And moving right along, love Tesla, love what they're doing for a lot of things, and but you also have to separate the stock from the
The
company.
company. You got anything else on the international side?
No, my arms are tired.
Yeah, boy, holy smokes. I have enough frequent flyer miles. We go around the world twice this weekend. Luckily, I have only a couple of things here. First, PDC, not PDC, Pioneer and Parsley merger today. Approved. Ding, ding, ding. Shareholders 99% on both sides. Yeah, I mean, was the Sheffields not going to approve this? I mean, this was coming down the pipe for months. Good to see that one go through though in terms of regulatory. Interior Resources, we talked yesterday. They offered a $500 million debt offering. Well, today they upsized it to $700 million, and markets love that. Free money, baby. Their stock jumped 13 percentage points, almost a whole dollar on that front. Here's a name we haven't mentioned in a little while, Stu. Chesapeake Energy. Where have they been? Well, they've been dealing with creditors right now. As you guys, let's put some context on this for a second. Management in October, for however much longer that management's still there, they went ahead and proposed a $4.1 billion total equity package for Chesapeake. Now, remember, when they submitted that in October 2021, it assumed a WTI oil price of $42. The creditors responded with a $7 billion proposal, and this week, the judge settled on a $5.1 billion equity. Now, remember, today's at $52. The curve has moved materially since this proposal, and, you know, when we break down some of the numbers here, looks like they're going to emerge with about $1.9 million in net debt. Shout out to War527 on Twitter. He was the one that broke this story and kicked me over a bunch of notes. You can dive into the SEC filings. Do I think this is a higher valuation than what it should be? It should. But they do have revenues. What's nice is, they still have those mineral payments they have to put out, which is absolutely absurd. Go look at the cash flow statement. It'd be very interesting to see what happens to Chesapeake long term. I think they've obviously, their net, their net. I love this levered free cash flow. What does that even mean? Levered free cash flow. I'm out unlevered free cash flow. It just kills me. They are going to exit their RBL. With their exit RBL is going to be about $1 billion, and they're going to have about $750 million in an exit term loan and liquidity. They'll exit with about $10 million in cash, with a net debt being about $1.7 billion current the proposal. So Chesapeake back. Wonder how long this management team will be there now that this proposal's assumed. Stu, thoughts on Chesapeake? You're an Oklahoma guy.
I love Chesapeake. I've had a lot of friends there, but they've also laid off some folks that should have been laid off at Chesapeake from performance standards. But on the other hand, I have some friends that are still employed there, and my heart goes out to them on those things. So,
yeah, I mean, I think if you're still employed with Chesapeake, you're probably good. They're not laying people off at this point. The real question was, are they able to take this and build a sustainable company now? Because some of the commentary is good. I mean, at $50 oil or above, they're good. I think below $50 oil, I think this just puts them on another treadmill for longer, kicks the can
Michael,
down the road.
The only thing I would take a look at is the management packages. I haven't read the document on that. And if those knuckleheads are still getting paid big bucks, I would come unglued.
The problem is it's still the same management team.
Ding.
So I don't care if they're getting paid or not.
Exactly. But now Liberty, when they had to lay employees off, they took a 50% pay cut?
It was like 60.
60%. God bless the folks over at Liberty. These other knotheads, I don't know.
Yeah, I mean, it's we'll see. We'll see how long this management team lasts. Anything else for the show, Stu?
Man, I'm wiped out. Thank you very much.
No, it's been a great day, guys. For everything, check out www.energynewsbeat.com. Subscribe to our one-click notifications. Never miss a story. But with this, I'm going to go ahead and get out of here, let you guys finish up your day, get back to work. For Stuart Turley, I'm Michael Tanner. Thank you for taking your time to watch us. We will see you tomorrow on The Beat.